Hi, this is Zach here from Zach's Traders Cafe with a quick look at the major markets at 6 a.m. on the 24th of June, just in the wake of the Brexit news. Obviously, I'm not using my normal charts here. This is courtesy of IG, the spread betting company, who I think have decent price action shown on this daily chart. Basically, the 58.45 level was the late February support there. That's been crushed quite easily so far. Early on Friday, we had the obvious bull trap situation through 6,400, which, in fact, even at the time seemed to be one that was causing the market difficulty. Now the situation is really we're looking towards that old floor around 55 to 5,600 from February, and it would be very surprising now after the ferocity of the bull trap through 6,400 if we didn't go back to what is normally the range of the year. As far as the initial strategy, though, any rebounds towards 58.45, that February support regarded as a shorting opportunity. This stage only really well above 5,900, 5,950 would really change the picture, and that is not expected. I think the surprise of the Brexit decision should ensure that there is very little in the way of rebounds. For the DAX, interesting that it was slightly higher in an equivalent sense. So at least initially, the pain is mainly being meted out to the UK market, albeit the DAX is not that much further behind. The equivalent level would really here be around 9,300 rather than 94.75 where we are at the moment. But looking for really below 9,500, that there was a low there at 94.84 in April, below 9,500 down towards the 9,000 zone, where there are gaps to be filled from February on this chart. This stage only really well above 9,600 would change the picture. Onto Wall Street, we've broken that 17,300 neckline, so that gives us an extended top here at and above, just above 18,000. Situation would be that we'd be looking for really a move back down towards that 16,800 March support area, even if this market recovers after that. On to sterling or cable at 133.30, 133.73 at the moment. Looking for a trajectory here towards 128, which is a support line projection from the autumn, and that's really valid probably while we're below 135 to 136. I don't think it's more easy to be more precise than that, but 128 looks to be on the cards here, even if we then head higher. For gold, everything panned out in one day, really bounced off the 50-day moving average. I think that's at 12.56 yesterday, and then up to the $1,350 target, which has been trumpeted here on several occasions and for quite a while now. Hopefully, any retracement won't go back to lower than the former resistance zone around 1310, 1320. Before we head back higher again. Best case scenario target here probably at this stage towards 1400, but not really expecting much more than that. I mean, this market has done what it was supposed to do, which was hit 1350, and that's the top of the main price channel that has been dominating for quite some time. Onto euro dollar, losing 110 quite easily, but 111 really was the 110.96, which is where the 200-day moving average was the big deal. Now relatively straightforward that we're looking for February-March support around 108 as the target. Finishing off with dollar yen, where our friends at the Bank of Japan are going to have a bit of a headache this morning, trying to shore up this cross. We've already been below 100, and I think that's where this market is going to head again. Really, this was looking extremely weak before even before the Brexit activity happened. We managed to just hit the old 105.55 support as new resistance yesterday, but really looking for a 99 to 98 yen target on this situation. Any strength back towards 103, 103.50 the previous low regarded as a shorting opportunity. That's it for me. More updates at the same time on Monday and probably during the day on TipTV.